I think the market action in the last 3 4 days has improved slightly. We've seen a bout of short covering in the last 2 days, particularly I think on Friday and Monday. Yesterday was a more of a mild bit of a day for the indices. Not much of a queue, which transpires even today as well. It's very stock specific. So you look at the advanced decline ratio, you look at the sectors and the stocks within the sectors moving up higher. It's not showing any major synchronized price uptick. So you have, for example, only the pharma stocks which are moving up higher, few FMCG names are moving up higher, and just individual stocks from the sectors which are moving up higher. So in this kind of a market, it indicates that it's going to be more stock specific. It's likely that the indices could go through a bit of a sideways range for at least the next couple of days before you see any kind of a trend pickup. Now, the two levels which I mentioned yesterday as well, that something to watch out for from a trader perspective. One is in the 11,300 mark on the Nifty. I still believe that that's an important hurdle. The indices need to cross and close above it for a sustained confirmation that we finally managed to come out of the downtrend. And on the support side, I believe 11,100 to 11,000 levels. I think these are very strong support levels. Until the time the index is trading up, above these levels, traders can hold on to the long positions and probably have even a long bias in individual names. With that, I'll now indicate two buy calls. The first one is from the low risk criteria. Would look at Godrej Consumers as an interesting buy. The stock finally managed to show some signs of recovery this month so far. The stock is up 11.5, 12% for the week as well. The stock seems to be have picked up good pace on the daily and the weekly charts. There have been some strong breakout confirmations for Godrej Consumers breaking out and Ichimoku pattern, which is a technical pattern breakout that generally results into a multi-week rally for stock prices. So I would suggest the buy on Godrej Consumers targets to be kept at 780. Stop loss could be kept at 700. Would term this as a slightly low risk idea given the kind of low beta nature of the stock. The second would be from a high risk category. It's a buy on Canara Bank. Again, I think the PSU banking stocks are showing some signs of a synchronized trend. You saw SBI, Canara Bank, PNB, Bank of Baroda, etc. Doing pretty well over the last 2 days of the recovery on the bank Nifty. Yesterday was a bit of a pause, and these stocks have managed to come back again quite well today. So I think that's a very strong indication of a new trend in the making for PSU banks. Could term this as a high risk buy, but a target of almost 100 on Canara Bank, and stop loss could be kept at 84 rupees.
Gaurang, over to you then. Before we get your ideas as well, I just want to get in your fundamental take on the equity markets, on the valuations. Many people did say that India at this point of time is overvalued. We've seen about a 300-point correction come by from the recent highs witnessed. So your view on the overall equity markets and, of course, your high risk and low risk ideas.
Thank you, Mishina, and morning to all of you. So I think valuation, I mean, if you have a high risk appetite, I don't think you would mind venturing into the market to find those, ideas to invest in. And there are pockets sectorially, individual stocks, which look very attractive. So it totally depends upon individual to individual, investor to investor, as to what kind of comfort one derives when it comes to valuation. For us, we do believe that there are investable ideas even at current level. And not to forget, I think from the lows of March 2020 that we saw 7,500, correct me if I'm wrong, Mobina, on the Nifty spot, to 11,200 where we are right now. So in a matter of maybe 6 odd months, I think you have covered a very decent ground, if you will. And in that kind of a scenario, it is always good to see market consolidate. It is healthy for the market. We see it that way. You make a base, make a strong foundation so that you can withstand the next up move that you are likely to see. And under all possibilities, I think by the time we see end of October 2020, we should be somewhere close to about 12,000 on the Nifty spot I'm talking about. Having said that, and referring to those investable ideas, I think the first stock idea, both are in fact fundamental, Mubina, so they are low risk. They are not for short term, medium term. They are with at least 1.5 year time horizon. So the first one is from the uh, fertilizer stroke chemical space, specialty chemical space, that is UPL, earlier known as United Phosphorus Limited. Now it is known as UPL. Uh, whatever the government is doing in terms of reforms for the agriculture sector, plus the policies to reduce the dependency that we have for certain intermediaries when it comes to making fertilizer. I'm talking about the China policy post whatever has happened. Our sense is that United Phosphorus Limited, UPL Limited, will be one of the beneficiaries. And from a long-term point of view, we have a target of 665. The second one is from the discretionary stroke consumption space, that is Bata India. We heard the last quarter gone by on the management that they are planning to shut down the unviable stores. They are planning to focus more on value addition stores, larger stores wherein they can definitely have more footfalls and contribution to the sales top line, bottom line. The new range of products that Bata India has offered has definitely found some traction amongst the consumers. And more importantly, there are anti-dumping duty for certain products that come in to India from China as well as Bangladesh when it comes to footwear industry. So we believe that, and this is one stock which has actually shown tremendous performance, targeting 1680 from a long-term point of view. And mind you, Mubina, if the earnings are much better than what our estimates are, definitely the targets get revised.